Hello. 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 Good afternoon, friends. Welcome to webinar on GST. It's my pleasure to connect with you all, especially in this weekend time. Before getting into the webinar, I just want to introduce the speakers. My name is Govindraj. My name is Govindraj, and another speaker is Mr. Sharat Churiwala. We both are qualified chartered accountants, and I myself am heading this virtual CFO service in Sovatech, and Sharat is heading GST consultant. Earlier, he was heading indirect taxes in our Sovatech. We are both are qualified chartered accountant. I'm coming from the background of Big Four consulting firm, and Sharath is came from a background of a big, Fortune 500 company. He was working for a Fortune 500 company, manufacturing setup. So in this webinar, I'm just going to explain how we are going to conduct this webinar. The content of the webinar will be first, we're going to touch on the basic, introduction on the GST. Post that, we'll touch on the impact that GST is going to make on the business. Then, Sharath is going to continue with the GST implementation, which covers transition provision and the compliance to be taken care. And the webinar will be open for question and answer session. So let's begin with the introduction. So in coming to introduction, the now GST is apply on supply of goods. It is not on sale of sale. I mean, the point of taxation in GST is now on supply. Earlier, in the excise duty, the point of taxation was the moment the goods get manufactured, and in case of VAT, it was on. But in GST, it is on the supply of goods. The moment the item gets supplied, either it be warehouse or from warehouse to different branches, the every supply will attract a GST. It's a supply of the point of taxation is on supply, and it is a destination based, no, not origin based. I mean, the where the item or the goods or service get consumed, the tax liability accrues there. In earlier laws, the tax revenue used to accrue to the authorities from where the sale or the manufacturing used to origin. Now it is on the destination base. I mean, I think in general everybody knows that, like, GST is a one tax for one nation, which covers most every component. This is some of the taxes which is subsumed, which are included in the GST. With respect to central state tax, like service tax is one main thing, central excise duty, additional duty, CVD. These are some of the tax which is included in the GST when it comes to central taxes, and which is in state tax. Some of the taxes, like luxury tax, entry tax, VAT, purchase tax. These are some of the tax which are included in the GST. But there are certain taxes which are not included in GST, like still that will be separately. It is not covered under GST, like stamp duty, property tax, like export duty, basic customs duty. These are some of still few more are there, like toll tax, all this. It is not covered under GST as of now. Now, what types of GST we have? Like we have 4 types of GST, like CGST, which is central GST, state GST, integrated GST, and union GST. When there is a transaction within the single state, then there will be 2 taxes will apply. One is the central GST and state GST. Some portion will go to central government, some portion will remain with the state government, which is in general 50-50%. Any any transaction within domestic has to be charged with the 2 types of tax, like CGST and the SGST. If the transaction is between one state to another state, then it will be a IGST, and even import and export falls under IGST bracket. And where there's a transaction in union territories, that will be UGST. And coming to GST rates, there are five types of rates. I will not get in detail. I mean, I think most of you people know about the rates as of now. But as a presentation, I'm going like what are the rates? Like 0% rate. Most of the item falls under 0%, which is daily consumables items. And there's a 5% rate, 12%, 18%, and 28%. Most of luxury items falls under 18%. 28% rate. And services, yeah, in general, all are falls under 18% rate. Now let's move on a impact of GST. How the GST is going to impact the business, impact your business. The GST impact we are categorized in three: the impact on volume and the top line, impact on the profitability of business, and impact on working capital. Okay. Coming to impact on volume of sales and profitability, these two are like interlinked. I mean, top line cannot be increased taking the hit on the profitability, because in general the volume increase depends on the cost. I mean, the value at which will you sell. I mean, the more the less cost, the more volume can be sold. Generally, you will take a hit on the profitability when you try to increase on the volume. So it's vice versa. So, but as a businessman, one always look to optimize the level. What level, what kind of volume he has to increase, and what type, what profitability he has to maintain. It's entirely depends what type of business he is into, and what rate of tax is falling under. Is it falling under 8%, 28%? I'm sorry, 5%, 12%, 18%, or 28%? Which rate will fall, and what type of registration is under? Like whether he is under composite registration scheme. I think you all might know about composite scheme. So it is up to 75 lakhs. One can opt for composite registration. So where you need not to charge, whatever GST normal rate, it can be charged like 2%, 5%, 1%. So generally, most of the categories falls under 2% tax rate. So actually, the impact of business depends on whether you are a composite dealer and what the kind of market you are serving, whether you are serving a B2B or a B2C. If you are a B2C customer, you are serving a B2C business, you are serving your end customer, definitely the customer sees that what cost he is buying, because what will happen in if you are a composite registered a composite scheme, you can't take input. Then whatever tax you will pay, that will become a cost for you. Then you have to charge your 2%, you have to bear the tax, which is a composite tax, which you can't charge to a customer. In general, what happens, the cost will increase. Your cost as a composite supplier, it will increase. Okay. But however, it also depends that the item you are dealing with, whether you are dealing with 5% rate items or 18% rate item or 28% item. Because if you are dealing with 5% item, see, if you are a normal register, even 5%, though you take input, you are going to charge 5% as an output. You will be charging end customer 5%. But if you are in a composite scheme, if you are handling only the 5% supply, though it become a cost, you will not take an input, but the charge what you are going to charge is only 2%. So the effect per se in a small rate, when you are dealing with an item which is a small rate like 5%, it will not make much impact as a composite supplier. But if it is an 18% or 28%, you are dealing with a product which is as 18%, 28%, and you are under composite scheme serving a B2C market, then definitely it will impact a normal register. Say what will happen if you are dealing with a 18% supply. As a normal register, you can take input, but you will be charging 18% to the end customer. As a composite scheme guy, you will be taking, the 18% is going to be a cost for you, but end customer you'll be charging 2%. Though you will not charge, but you might increase the cost for the 2% to take care of your profitability. However, having said this, it is not entirely dependent on the rate you are going to deal with, but even the margin what you are going to add, because all the taxes which you are going to pay on the margin which you are going to add, that's also be a criteria or important point in deciding on whether you have to get into composite or normal registration. If you are in a B2B market, in B2B market, what happens? you will have a suppliers. You have to see that what kind of suppliers you have, whether the suppliers who are registered normally or registered under composite scheme, because whatever they're charging, it's going to add your cost. In turn, it will add your selling cost to your subsequent seller. So you need to make a proper exercise, like who are, say, like what are the percentage total in total supply, what percentage constitute the composite supply by composite dealers, and rest of the percentage contributed by uh, other registration guy, so that it will help you to take a proper pricing decision, how much to increase, how much to reduce, and how to help your suppliers to register under normal, whether it is required to make them to register under normal registration or composite registration. It will help. One has to make a detailed study of this impact, then only one can take a decision, because GST is such that the impact is impact is going to affect entire value chain. Unless otherwise you will not educate even the your selling partner, then, because you have to advise him properly whether to register under composite scheme or register under other registration depending upon your product, so that you can make maximum out of your business. And coming to impact on working capital, yes, there is a lot of impact is going to affect your working capital because of the GST. One, it could be some business, it could be adverse, and business it could be in a better, in a possible way, like positive way. So now in GST, the moment you take any advance, you have to pay GST. In sales tax, it used to happen that once you raise the sales invoice, you used to pay GST. For example, in car business, the dealer used to pay the moment some customer books the car on advance, he used to pay on the once he sells the car. At the time of selling car, he used to release his liability towards the government. Now, the moment he take any advance, he has to pay the tax to the government. Most of the cases, what happens, these advances will become bad. People will tell their advance. In this case, there's a lot of hit on the capital, because 1 year use this credit feature adjustments. So this is one impact, because tax has to be paid on the advance received. And of course, there's a positive benefits also there. Like earlier in excess, if you are a manufacturer, you're supposed to pay the excess duty the moment the item get manufactured. But in case of GST, at the time of supply, so definitely, I mean, the manufacture and the supply, there will be time gap. So that is one benefit. Like it's a positive sign. Like you need not to discharge your excise liability immediately. So that is one impact in your working capital. And if you are supplying on an e-commerce portal, now in any e-commerce portal, one has to collect 1% TCS. There's a tax collection at sources there. So definitely it's going to hit the people who are on the e-commerce portal, who are entirely depends on supply for the two e-commerce portal. As in e-commerce portal, products are competing at a very high. It is a high competitive level is there, and even 1% TCS collection, it definitely is going to have an impact on the working capital. And one positive impact of GST would be, like the payments collection. I think collection going to improve very well, because as the GST force the recipient of goods pay the entire money, not on the GST money, entire money within 6 months. If he don't pay within 6 months, whatever input he has availed, he has to reverse. So what it will make helps is, like collection. It helps in collection improvement. It's one of the, I think, I feel it's very important and positive point with respect to GST impact. So that's all from my side. I'm handing over this webinar to my another speaker, Mr. Sharad.
Good afternoon, friends. This is Sharad here. So hopefully you have got a valuable information on what is GST, how it is going to impact on your business. Now let's see what all things you need to do while implementing GST in your business. So let's look at GST implementation. Now You need to file transaction one form within 90 days from the date of GST becoming effective. That is very, very important. This form is very important because you need to declare all the input tax credit lying in your closing stock. It could be in finished goods, semi-finished goods, whatever be the form. So whatever input credit is lying in this stock, that has to be declared in transition form 1 within 90 days from the date GST becomes effective. If you don't declare this details in transition 1 form, you cannot take input tax credit. So you have to file this form. Please do not miss filing this form. Second, as you are aware, the transition of GST started well in the month of January and Feb, and now we are in the month of July. So I'm quite sure there have been certain amendments. There will be certain changes in the business. So whatever changes have taken place in the business, let's say there is a change in address, let's say there is an addition of further goods or services, all those necessary amendments have to be done. Third, as you all are aware, normally service tax returns have to be filed on a 6 months basis. But since GST came into effect from 1st of July, so service tax returns from period April to June has to be filed by 15th of August. Similarly, if you are a trader or you are a manufacturer, please file your returns by due date. If returns are not filed in time under previous law, the GST Act is very strict. If you don't do this, there is a possibility that you won't be allowed availing of input tax credit in GST law. Let's move to transactions which is applicable in GST. So as you all are aware, in any business, there are certain transactions which happen on a day-to-day basis. This could be raising of invoices, this could be raising of debit notes, credit notes, all of this, right? So in this context, GST law has provided for certain rules, certain formats. So those have to be met. Like the minimum requirement in an invoice should be that there should be GSTIN number. So please ensure GSTIN number of your business, of your customer is there in the you have to ensure that GST numbers are there on receipt voucher. All of that should be there. If it is not there, then it is not right. Then you are not complying with GST law. Similarly, as you are aware, GST is based on supply of goods or services. So there should be adequate process to identify the how many times the movement happens when the supply takes place. So necessary process has to be established in business. So guys, you need to identify the time of supply in your business. So the basic rule of thumb in GST is either of the following event: time when you raise the invoice or advance when you receive. Earlier the event, the GST is leviable. It's a very simple rule. So please ensure that the GST is levied at that particular point of time. Third, as you know, in life, there are no free lunches. Similarly, in GST, there are no free lunches. Basically, GST is applicable on all types of transaction, whether it is with consideration, whether it is without consideration. For example, GST will be applicable on transactions with related parties if it is with or without consideration. So let's assume you are a subsidiary company of a company based out of Europe and they provide you service free of cost. Then GST has to be paid on a reverse charge basis, even though they have given you the service free of cost. Similarly, GST is applicable on free supplies made to another person who is also registered with GST. So, for example, you are running a business promotion. As part of that business promotion, you are giving free samples to companies, free demos, free product approvals. Basically, to see whether your product meets GST, even though value is zero. Third, GST is applicable on disposal of items where input tax credit has been taken. So let's assume you are running a company. There are computers which is there in your business for more than 5 years. Now you want to dispose them. Now you have taken GST input on all those computers and you are disposing at free of cost. Then again, GST has to be paid. Therefore, keeping all these facts in mind, you need to ensure that there are necessary policies which need to be identified and it has to be put in place. Another thing which you should keep in mind is discounting policy. You know, today in every business, cash discount is very relevant. Now it is quite prevalent to give cash discount. In GST law, the law is very clear. The discount has to be given at the time or before the time of supply. Let's say you give a discount post supply services, let's say a cash discount, then you have to ensure two things. One, this cash discount is linked to specific invoices. Second, the recipient of goods or services have to reverse proportionate input tax credit. So if you are in a business where you often give cash discount, please keep these points in mind and frame your policy accordingly and to your customers so that there is no issues in future. Another point which is very relevant in GST is stock transfer. Earlier, in earlier laws like VAT and excise duty, there was no duty on stock transfer if you provided necessary forms. But in GST, the tax is there on stock transfer. Then in charging GST, one thing which you have to clearly identify is the HSN code and SAC code. Once you know your HSN code or SAC code, which is commonly referred to as Services Accounting Code or Harmonized System of Numbering, which is referred as HSN, then once you identify this, you can then find out the rates which is applicable to your products or services. Now let's look at compliance which you need to take care of in GST, right? So basically in GST, there are 3 returns to be filed if you are a normal registered dealer. The forms are GSTR1, which needs to be filed by 10th of next month, whereby you have to fill the details of outward supplies. Then there is a form called GSTR2, which you need to file by 15th of next month, where all the details whereby you have bought from your vendors, different kind of vendors have to be filled here. The point to be noted here is that the moment GST1 form is filed, the details in GSTR2 gets auto-populated, and those details you can confirm or you can request for adjustment from the opposing party, from the people who have filed the GSTR1. So basically most part of GSTR2 will be auto-populated, and this form has to be filed by 15th of next month. Coming to GSTR3, it has to be filed by 20th of next month. So here basically what happens is you need to summarize the details of all the outward supplies and summarize the details of all the inward receipts, and whatever tax is payable, it has to be paid by 20th of next month. Having said this, Government of India for the month of July has extended the dates. So GSTR1 and GSTR2 has to be filed in the month of September. However, payment of tax for the month of July has to be paid by 20th of August. So please keep these dates in mind. If you don't pay GST on time, or if you don't file GST on time, there could be penalty and interest which could range from 18 to 24%. So paying and complying with GST on time is very important. Another thing you have to take care of is if you are a composite dealer. If you are a composite supplier, then filing of the return is quarter, not monthly. So let's move to another section. Now let's look at transitional provisions which you need to be aware of while migrating to GST. So if you have VAT input, if you have VAT input tax credit which is unutilized, or you have unutilized SENVAT credit which is unutilized, so those can be carried forward in GST era provided these details are submitted in transition form 1, which was discussed here. So please ensure that whatever is unutilized input tax credit, all these are carried forward and declared in transition form 1. So for example, if you have state VAT input unutilized, that will be carried forward as SGST. Similarly, if you have excise or a service tax credit which is unutilized, that will be carried forward as CGST. Now, one great provision in GST law, which not many people are aware, is that, let's say you are a trader, you deal in the buying and selling of goods, and you have certain stocks in hand as on 30th of June. And if these goods are, let's say, bought from a manufacturer who has charged you excise duty, under GST era, you can take benefit of this excise duty which is there in the bill and can pass on the benefit to your customers. This way, you will become very competitive, and customer will not feel that extra burden of increase in price. Similarly, it is very common in the business for the goods or services to be written, specifically goods. So in GST, you can still get a return of goods provided it happens within 6 months from the date GST becomes effective. So hopefully, friends, in this webinar, we have attempted to give you an overall picture about GST implementation. As a financial management and consulting company, we help a large number of companies to transition to GST smoothly, right? So as you all are aware, every business is unique in its own requirement, right? So therefore, requirement of GST in your business and how it has to be implemented will differ from company to company. In this respect, we provide GST consulting services, right? So as part of GST consulting services, we provide 3 types of services: GST implementation, GST compliance, and GST training. As part of GST implementation service, we give end to end. Basically, we will identify the rates for you. We will identify the HSN code, SAC code. We will consult you and guide you how the invoice has to be raised. Everything. We will also assess how GST will impact your business. We will review existing contract agreements which you have with your suppliers, with your customers, so that we can tell you how it is going to impact you in terms of GST. We'll also consult you in terms of sorting out the pending cases from earlier laws like VAT, excise, service tax. All of that we provide as part of GST implementation. Similarly, we also have a GST monthly compliance services, right? So whereby what we do is, first step, we will redraft your chart of accounts to ensure that data is captured correctly in right accounts. Second, will help you to in filing necessary monthly returns, which is GSTR1, GSTR2, GST3, and also annual returns which has to be filed. Also, will keep you updated whatever changes happens in GST. Fourth, we'll also give you audit. We can provide you the audit services which is required annually as per GST if you meet certain threshold, right? Third service what we provide as part of GST is consulting is GST training, whereby we can give training to in-house staff. This training can be delivered both online and offline. So we have programs related to that. As you all know, SOATech is one of the leading management consulting and outsourcing and compliance company in India. As part of our services, we have other services as well. Some of the services we provide are virtual CFO, audits, statutory compliance, labor compliance, accounting outsourcing, transfer pricing, valuation, due diligence, IFC implementation. So these are some of the services we provide as a company. So guys, friends, so if you want to get in touch with us to avail some of our services or need some help in GST consulting, you can get in touch. You can get in touch with us by writing an email to info@soatech.in, or you can call on the number. Don't worry, if you want you want to go back and listen to this webinar, we'll be also sending you the link of the webinar, whereby you can listen to the discussion at your own ease, at your own comfort. It was pleasure having you on the webinar. For time being, bye.